All right. Thank you, Aaron. I appreciate it. Uh, there was so much optimism in there that I'm just overwhelmed by it. And I'm going to bring more, I think, in the cattle side of this stuff. I think most people have kind of been keeping their eyes on uh, the futures market lately. We had the Tri-State Beef Conference in Northeast Tennessee on Thursday, and I think we dropped $4 on Thursday, and then 3.5 or $4 on Friday, and then Monday, uh, things just really dissipated in a hurry, and so we just had several days of declining prices in the feeder cattle futures. Uh, I still don't. I'd hate to say that cattle prices aren't still strong, and we probably had some things overvalued to begin with. Um, but it when you have drought in many regions of the state, especially where we got a lot of cattle, and then you couple that with a declining market at the same time, it can be rather depressing. Uh, but anyway, we'll kind of talk about some of those basics. I think heifer retention is going to continue to be slow, especially in these regions where we have drought, and that's not just in Tennessee. I'm not just talking about in Tennessee. I'm talking about in large portions of the country that are still experiencing drought. May not be where all the corn and soybeans are grown, but it's definitely where we have a lot of pasture and hay ground. And so y'all can read that. It's amazing what stocker operators have tied up in these cattle right now, and same way with feed yards. Things are just getting really, really expensive. And then Aaron mentioned interest rates. When you're working on borrowed capital, all of a sudden all those costs increase even more. And so those are things to be thinking about as we move forward. We've continued to have really, really strong slaughter steer prices. 190 plus is that's hard to be disappointed in. I think I told many of y'all one time before that about a year ago I had been in Louisiana to do a meeting for their Farm Bureau, and there were people there that had been talking with folks from DC that said, "Oh yeah, we're going to see $2 plus finished cattle." And I don't know that those people were actually from DC. They were just people in the industry that happened to be there while they were there as well. But we've yet to hit that $2 mark on these live cattle. Now there's some cattle in the north that have come really, really close to it, and maybe there have been a few that traded there on a live basis, but none that I'm aware of. And we definitely haven't seen it across the whole cattle complex where live cattle are trading at $2. But anyway, I do think there's potential to reach that level sometime in the near term, and mainly that's mainly just due to a supply issue, much more so than anything else. Let's hit really close to home what 5 and 6 weight steer prices have been doing. They have been strong ever since the spring. Do I think they will slack off a little bit in the fall? Well, I think we're already starting to see some softening. Do I think they're going to soften a lot? Probably not. If you look at the 2023 price line there, um, I don't think we're going to see these cattle fall below that price line through the remainder of the year. If I'm wrong, that's I'll own up to being wrong if that actually happens. But I just don't see these cattle falling below last year's prices through the remainder of the year. And what's that leave us? About 5 months, I guess. So we'll see how that plays out. But if you're still selling 260, 270 weight calves straight off the cow, um, I don't think anybody's going to be too disappointed. The only thing they'll be disappointed in is the fact that they didn't get to sell cattle when they were at 280, 290, in that price range. Heavier weight cattle, more yearling type cattle, they're still holding strong. We did see some softening. Oh goodness, I don't know how many loads it sold last week through video sale, but we moved a lot of cattle on those sales, and prices were down probably $7 to $8 compared to the previous month per hundredweight. So when you think about that, that does add up in a hurry. When you talk about $60 to $70 a head, and you put that across a load lot, that's a lot of money in a load that disappeared just over a month's time period. And in reality, most of those dollars disappeared in the few days just prior to the actual sales. And I'm not saying that we should be sad about it or disappointed or anything else, but it is something that's realized, and it can work on somebody's psychological aspects and views. So we're going to continue to see strong demand for these cattle regardless. The feedlots have to have these cattle. They don't have any other choice. If you don't have cattle, you're not there's no way to make money, and you still have the expense of the feed yard. So they're going to keep moving cattle, and we should see some steadying of the prices. I think a steady price is good. I don't think we need higher and higher prices. A good steady price would really benefit producers, because I think we can sustain a steady price longer than we can sustain a price that just keeps escalating. The last thing to hit really close to home are the slaughter cow prices. If you've got producers that have not sold these girls, now is the time. Now is the time. It's amazing the salvage value that you can get out of slaughter cows. And if you think you need to replace them, well, we have plenty to replace them with. I mean, there are a lot of females that are older that need to be gone, and then with those dollars you can put in a lot younger animal that should probably have some better genetic package behind her and should be a profitable animal moving forward. So producers should really consider that aspect of the market, getting rid of these older cows, because we really need the lean grinding beef to mix with fattier beef, because of the insatiable demand that we have for ground beef. Briefly here, just to show you what heifer, steer, and beef cow slaughter have done. Heifer slaughter's down 1.8%, steer down 1.4%, and beef cows down 15.8%. So you can see pretty easily why we need the cows, why cow prices are so strong, because we're not killing near as many as what we have been killing. And so there's just not that that supply of lean grinding beef to go with some fattier beef that we cut off of these finished animals. When we look at that heifer slaughter compared to that steer slaughter number, the main thing here is just to point out that we have not started rebuilding the beef cow herd at all yet. I just don't know that. My expectation has always been that heifer retention would not start until this fall, and that is because we had such bad drought in most of cattle country late last summer, into the fall, and into winter, that nobody could keep any of last year's springborn calves and do anything with them for this year. Well, we might, so that put us back to waiting on this year's spring calf crop. That calf crop will soon be weaned, and then we'll look for development of those females. Well, if this drought persists in some of these regions where there is severe drought, that have a lot of cattle, it's highly unlikely any of those regions will retain very many heifers to rebuild a cattle herd. It's a situation where, regardless of what the market says it wants, there are some environmental components that influence how we make decisions and what we can do. So beef production is just down slightly. The main reason beef production is down slightly is, you can see we've reduced slaughter considerably, but beef production is only down because we've just been growing these cattle bigger and bigger and bigger. We have a lot higher dressing weight than what we had the previous year, so we really hadn't dropped beef production much at all. Pork production's up, and broiler production would like to be up, but they continue to be faced with the challenges of infertile male birds, and so, or maybe I shouldn't say infertile, maybe subfertile. But anyway, we're just not getting all the eggs fertilized, and so we're going to continue to work through that. But they sure would like to have increased production in the near term. I'm not going to spend much time here. Just again, the main thing is that we're going to continue to see increased imports relative to a year ago and see declining exports relative to a year ago. And that's just mainly due to the domestic prices that we have on beef and the actual production that we have. Lower production, higher prices means less exports, but it also means we should be importing more because uh, imports appear more attractive and more favorable from a cost standpoint. But at the same time, it's the lean grinding beef that we're really after, and that's what we've always imported is lean grinding beef, and so we're really after that product. Uh, you can look at boxed beef prices here. We're way off of the historical high, which would be close to 450, which was when coronavirus hit. But I tell you, we've had a very strong, resilient boxed beef market. There always, I mean, I don't know how much concern there's been in will the consumer continue to demand beef? Will they continue to buy beef? Will they continue to buy beef? Well, so far, the consumer really hadn't slowed down on buying beef. They're still purchasing beef, and so demand has been very resilient. Um, could things slow down? Yes. Aaron mentioned several different economic factors, and I was actually talking with a realtor the other day, and they had been busy, 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 and they're still busy, he said, but they're definitely starting to see the housing market slow. They're starting to see land prices slip. Their auction business is also it's going and blowing, but they're starting to all these little headwinds that we knew were going to eventually come into play are coming into play, and so when you know that there's not as many dollars out there to be spent because uh, the economic factors are saying, hey, we're pulling dollars into other areas. We may see we may see consumers trade down to lower valued beef products, but at this point, we just have not seen a tremendous amount of that. So my concern is minimal, but I also, when I say it's minimal, it's because I also have expectations that a slowing economy in general should slow down some of that beef movement just because of its price relative to other meats. I will show the same. Uh, this actually shows a lot more moderate drought conditions than what we have experienced. But when you think about the southeast, there's a lot of cattle in the portions of the southeast that are shown here, and even up into Virginia and West Virginia, Pennsylvania. But then you go out west and you look at the northwest, and you think about Montana and Wyoming, uh, Colorado. We're talking about a lot of animals out there in those regions, and so those folks may not have the opportunity to retain females in any form or fashion. And then you look at Kansas and parts of Oklahoma and true west Texas and into New Mexico. Again, large cattle producing regions that won't be able to do a whole lot. Sure, all the corn country and soybean producing country seems to be in good shape, and there's a few cattle scattered about here and there in all those states. Uh, but we're still looking at concerns here in these other regions where it just may not be have the ability to retain females and put them back in the breeding herd. I just want to briefly show what corn price is in Omaha. Essentially $4. I think it's $4 a penny was what it was last week. But $4 corn, you would think that would make feeding cattle pretty cheap. And maybe it does, but it hadn't shown up in the standpoint of lower corn prices have really resulted in higher cattle prices. I don't think that same relationship exists that we used to have. I think that relationship is much different in that now we pretty much take different products out of both corn and soybeans, and we really get as much as we can of this and that and the other. And those leftover products, we turn them, they're a byproduct of, and it's a feedstuff that we use, but it's just not as directly related to the corn market as it used to be. Maybe I should back up a second and talk about hay prices. And a lot of the regions that have suffered drought issues, we might have had a really strong spring hay production, but I know I saw a lot of hay that was cut late, which is more than likely going to be lower quality hay. And then we've had struggled with so much drought in some of the regions of Tennessee specifically that those regions may not get another cutting. They may get a cutting, but it probably won't be that good of a cutting. Um, I know most of the people in my area aren't too concerned but about hay, but there have been people that have started feeding hay. And so it's a mixed bag, and it's very regional because you just can't afford to haul hay too awful far and it be cost effective. Um, but I do think if people get tight on hay, there will be hay available. It just you may have to pay that little bit more to get it to where you are. $1.11 is what it costs to feed cattle that came off of feed in June. Though that cost should continue to decline, especially with these lower corn prices. Uh, we'll see how that plays out. I don't know that this is going to strictly support feeder cattle prices a whole lot. Marginal declines in the cost of feed, mainly just because we're talking about such big dollars to begin with in purchasing cattle. The main thing that's going to drive that is going to be the finished cattle price to some degree. Here's August feeder cattle. This is what I talked about at the very beginning. You can see where we had 3 big days of decline. So essentially we lost $14, $15 from the close on Wednesday through yesterday. That's the August market. That is a huge hit to anything. Maybe there's opportunities for speculative positions now. I don't know. Let's look at November very briefly. So let me back up and just point out that August is at 243 is where it closed yesterday. The market hadn't opened this morning, so that's where it's sitting. But if you look into November, now you're looking at $2 lower in November than what August cattle are. And even if you go out into January and further into next spring, we're starting to see even lower prices. I think some of them are trading as low as 235. The thing of it is on a whim, it could reverse and go back the other way. Aaron and I can talk about we think it's going to do this or we think it's going to do that, and we have these expectations and those expectations, and all of those are based off these fundamentals that we're familiar with. And even if you use some technical analysis, you say, well, this is what it should do. But it is amazing how the market, whether it has new information or doesn't have new information, or what people think is information, it can change on a whim and reverse its course of direction. And so it just points to why price risk management is so important. We've got to use the tools available to us, and when the market's offering us a good opportunity, we have to take advantage of it, because in a couple of days' time, it could be it could go against us, or it could go for us. But it's the downside price risk as a seller that we're concerned about, and as a buyer, because we even serve the buyers in this state. Price increases is that risk. So those are things to think about. Like I said, I do think we have a chance at $2 on finished cattle. Will we get it in the fourth quarter? I don't know, but I do think that in 2025, I do think we have an opportunity to push those prices over the $2 mark, mainly. Cattle going straight through the auction market. Y'all can kind of see those there from August through November. My expectations have declined a little bit, but that's okay. They're still really, really strong prices. And again, we just have to figure out how to take advantage of the opportunities that are presented to us when they're presented to us. Again, still think there's 3 good years of cattle prices. If we, I guess at this point, I think we'll have a smaller cow herd to start 2025 than we did in 2024. So I think we're going to have an even smaller cow herd now than what we had at the beginning of this year. And so when I say a bull market for the next 3 years, I mean, I just keep extending that and extending that because we've yet to see any type of expansion in the cow herd, and 2025 is likely going to continue to be a lower cattle inventory.